Hey everybody, welcome back to the channel. You already know if you watched my last video that I'm dropping several real estate related stocks today. Just to review, several of them have earnings coming up this week. We did get new housing data within the last couple of hours. So right now we're going to be looking at ticker symbol JLL, which is a real estate services, company. They focus on several different segments, real estate services, including agency leasing and tenant representation, property management and advisory and consulting services. So they are in the thick of people who are buying property to invest, investors who are looking to sell their properties, etc. So their earnings on Tuesday, tomorrow, before the market open, I believe. Let me see. Yep. It could be indicative or, echo essentially what the new housing or the new January sales data was that was just released. So let's go ahead and just check out this chart really quick at a high level. The stock is trading at the same area it was back in around 2015, which is crazy because you would think the stock has done better. And we have seen the stock get to a low of around 79, but a high of around 274. It is trading at $182 today. We're going to determine, number one, is this realistic? Is the stock trading at a decent price? Is there opportunity for it to go higher, lower? Are institutions and hedge funds loading this up by the boat, or are they dumping? And yeah, we'll just look at overall trends. So let's go ahead and look down. The RSI strength actually looks like it's kind of tapering off a little bit. Oh, my head's in the way. Right here, it's at 53, and it's kind of looks like it's taking a breather to go up, or it's taking a breather and gonna just plop down. Earnings on Tuesday are gonna probably tell us the story for the rest of this. We can see the momentum actually going upward right here. So the momentum could be going up. Money flow is slightly going up as well, and the relative momentum is actually curving upwards, like right here. You can kind of see like a whoop. So you interpret that how you will. What I want to know is I want to take the numbers from all of this and see what price I get. So really quickly looking at the forward PE. In today's the guidance they have today going forward, they're going to be cheap. Today, they're a little bit overpriced. So if they're making the same money today in the future, they could, with the guidance that they're providing with the growth, they are going to be decently valued at a price to earnings of 15. That is the industry standard of what you'd want to call desirable for PEs. But we're going to perform my calculation here. This calculation is based off of, I worked for a microcap company many years ago. We had financial resources come in to value the stock based off of sales, and every $100 million in sales equaled to a $1 stock. I include market cap if it's over 1 billion because big money, hedge funds, institutions can sway the price of a stock considerably. So once we get up into the billions, it gets added to the stock. So that's part of the calculation. There's some backstory. Let's go ahead and move forward. So the company has a 8,700,000,000 market cap. They make income of 227,800,000. Whoops, what did I just do? 8,700,000,000. Plus they have income of 227,800,000. Plus, they do $20,540,000,000 in revenue a year. That is insane. Okay, so now we're going to go down, and before I go down, look at this. This is what you want to see in sales, up and to the right, up and to the right. You want to see this as well. You can see shares outstanding are going down. No dilution. They are being shareholder friendly to the retail. EPS seems a little mixed, but pretty flat. It's fine. 13.26 is considerable. If you look at 2020, 2019, and 2018, 2021 was huge. So on with our calculation. Sorry for jumping around. They have 500, so plus 519,300,000. Cash, good for them. Total debt is 2,206,100,000. All right. And just looking here really quick, their cash position is good. They did have a lot more cash in 2021. Let's look at their total assets is 15.5 billion. That's great. Total liabilities 9.5 billion. So not quite the 2-to-1 ratio that I'd like to see. Total debt is kind of lingering at a 2 billion, 2.2 billion. It's kind of been there since about 2021. Not really addressing the whole debt situation at the moment. Looking at insiders buying or selling, neither. So that's good. I would like to see insiders buying, but not selling is good. So we have our calculation here, and we're going to go ahead and take this and divide it by 47,160,000. This is saying a stock price target of $589, which is almost double what it was back in 2022. That's crazy. Did I miss a zero? If I would have missed a zero, that'd make it a $58 stock. No, that's crazy. Institutions own 96% of this stock. Let's see what the new data shows. I'm going to say higher. I'm going to say institutions own over 100%. Yeah. All right, 112% right here. All right. That is about 15% more than the older data that we have down here, 96%. Let's go ahead and see what the big dogs are doing. Vanguard decreased like 100,000 shares. BlackRock decreased about 200 and some thousand shares. FMR increased. Cohen and Steers sold out completely. Generation Investment sold a little bit. And then we can see buys, sells, different companies adding to their position. So with them having a $589 stock price, I want to look at this on my my preferred platform. So JLL. I've charted this one before. Awesome. This is crazy. So I don't remember when I charted this, but look how perfect the Fibonacci arc is right here. This monthly candle comes up and tests the actual middle ring here. That's awesome. So let's continue and see what we have in store. 275.77, right about there. Is this the low? This candle is 119.46. About right there. Look at that. So just zooming in a little bit closer. This inner candle that I just drew acts as support, resistance, breaks up, resistance, comes up and touches the other ring here, not once, but twice. Then this candle right here comes through the inner ring that I'm touching on the second arc that I just drew that I'm highlighting. And then this candle here, if it can't break 182, then I think it's going lower. But it looks like it's definitely in a bull flag here. So we have our flagpole here. Then we have the flag like this. And if I just do this, and then I can shorten it. So here's our flagpole like this, and I'll just add this blue line. Here's our flagpole that I just drew, that blue line, then our flag here. So with the calculation that I typically stand with, I mean, I think this one is honestly okay. This is something that I would get into. They don't have a dividend, which is kind of crazy because they have so much sales, but they're not really addressing their debt. I think they need to address their debt before they think about dividends. Good for them. What's their gross margin? It doesn't say. I don't know why it's not there. Let's see. Here we go. Okay, so that's not really good. That gross margin is not good. Oh, that's expenses. I see. That's not their cost of goods. I see. Yeah, cost of revenue, it's not showed. So interesting. But back in 2021, it was about 50% gross margin, over 50% gross margin. I wonder what it is today. Yeah, I mean, I think this one is worth waiting. I mean, if you want to take a starter position, this is trading as it was back in 2015. If you're looking for a real estate stock that has dividends, you have plenty of options. I don't really find anything about this one particularly attractive other than the possible appreciation from 182 to 500. So I'll be adding this one to my watch list. I want to watch how it reacts to earnings tomorrow morning. But with that, I hope you guys are having a wonderful day. If you made it this far, I have more videos coming out today. Have a great day. Consider subscribing. Consider the subscribe. Talk to you soon. Bye.